Hey everyone, and welcome. Today we're jumping into a topic that's, well, it's become a huge part of daily life for so many in Sri Lanka. Instant loan apps. They promise you cash in minutes, right? But what's really going on behind that convenience? Okay, let's dive in and figure out how to navigate this world safely. I want you to picture this. It's late, way after midnight. There's an emergency. Maybe a loved one needs medicine and they need it now. But the banks are all closed, the ATMs have limits. You know that feeling? That heart-pounding moment where you need a solution and any quick fix feels like the only solution? But hold on, before we hit that download button for a quick fix, let's just take a second with this piece of wisdom from Ben Franklin. It just perfectly captures the tightrope we're walking, doesn't it? That desperate, immediate need on one side and the heavy, long-term weight of debt on the other. This is the exact dilemma so many of us face with just a few taps on a phone screen. So, how do you solve that late-night emergency? Well, for millions, the answer has become these instant loan apps. They pop up, promising immediate relief. So let's first really dig into this promise of fast cash and understand why these things have just exploded in popularity all across Sri Lanka. First off, what are we even talking about here? Basically, these apps give you what are called micro loans. Think small, short-term loans that don't need you to put up any collateral, like property or gold. Their entire appeal, their whole reason for being is speed and simplicity. You can literally go from downloading an app to having cash in your bank, sometimes in less than an hour, with nothing but your phone. Now, this whole boom didn't just happen out of nowhere. It was kind of like a perfect storm of conditions right here in Sri Lanka. I mean, think about it. Almost everyone has a smartphone, right? We've got a growing freelance and informal economy, which means no traditional pay stubs. And let's be honest, sudden expenses for bills or repairs are a constant reality. For a small, urgent loan, traditional banks, they're often just way too slow to even be an option. So, of course, this boom has led to a total flood of these apps in the App Store. They're all shouting that they're the fastest, the easiest, the best. It can be completely overwhelming. Which brings us to the big question. How do these different apps actually stack up against each other? Okay, this table gives us a really quick snapshot, and you can see a huge difference right away. You've got apps like On Credit and LoanMe, which are all about super short-term, payday-style loans. You're expected to pay it all back within a month. But then you look at something like Lotus Loan or Fast Rupee, and they're offering much longer repayment periods. That simple difference can totally change how you manage the debt. All right, but as we all know, that amazing speed and convenience, well, it comes with a catch, a price. So now it's time to pull back the curtain and talk about the hidden dangers, the stuff they don't exactly advertise on their pretty App Store page. And here it is. This is the single biggest risk, the debt trap. It starts so small. You can't quite make a payment on one loan, so you think, okay, I'll just take out another one from a different app to cover it. But before you know it, you're juggling multiple due dates, the fees are piling up, and that tiny 10,000 rupee emergency loan has spiraled into a crisis you can't manage. So how do you spot one of these bad actors? Knowing these red flags is your first line of defense. If an app asks for a fee before you get any money, if it promises guaranteed approval to everybody, or uses crazy high-pressure tactics to get you to sign, just stop. And seriously, pay attention to the permissions. Why would a loan app need access to your photo gallery or all your contacts? They don't. That's a huge red flag. Okay, so we've talked about the risks, but let's not just focus on the bad stuff. Let's talk solutions. After you've filtered out the really obvious dangers, how do you actually choose from the apps that are left? Here are 4 key things you can do to stay in control and make a safe choice. First up, and listen, this is without a doubt the most important one. You absolutely, 100%, have to understand the real cost of the loan. Lenders can be really, really clever with how they show you the numbers, and this is where so many people get into trouble. See, they love to advertise a tiny little daily interest rate, maybe 0.5% a day. Sounds like nothing, right? But the number you have to look for is the annual percentage rate, the APR. When you actually do the math, that tiny 0.5% a day becomes a mind-blowing 182.5% a year. The takeaway here is simple. Always, always compare loans using the APR, not the daily rate. Number 2, remember that the interest rate is only part of the puzzle. You got to be a bit of a detective here and hunt for all the other charges. They'll call them processing fees, service fees, technology charges, and they're usually buried in the fine print. Sometimes they even take these fees out before the money hits your account, which means you get less cash but still have to pay back the full amount. Third, and this is a huge safety check, is the company regulated?
In Sri Lanka, the big one is the Central Bank of Sri Lanka, or CBSL. If a lender is regulated by them, they have to play by the rules on interest rates, data privacy, and how they collect their money. An unregulated lender, they're playing a different game, and you have almost zero protection if things go sideways.
And number 4, do your homework. Seriously, don't just look at the 5-star rating. You need to dig into the most recent 1- and 2-star reviews. What are people saying? Are they complaining about harassment, about debt collectors calling their family or their boss? This is where you find out how a company really behaves when a payment is late.
Now, before you even think about opening the App Store, it's really worth taking a step back and asking a bigger question. Is a super expensive loan app truly your only choice? Because a lot of the time, there are cheaper and way safer ways to handle a sudden cash shortage.
A personal loan from a regular bank will almost always have a much, much lower interest rate. A credit card can work in a pinch as long as you can pay it off really quickly. A lot of companies actually offer salary advances, and local cooperative societies, they were literally built to provide fair credit. And yeah, I know it can be tough to ask, but borrowing from family or a friend you trust is often the safest bet. They might take a bit more time, sure, but they can save you a world of financial pain.
So, we've looked at the promise, we've looked at the dangers, and we've looked at the smarter alternatives. What's the final takeaway here? It really just boils down to one thing: moving from a place of desperation to a place of empowerment. And that power comes from having the right information to make a clear, calm choice. So here's the one thing to burn into your memory. Before you ever tap that accept button, just pause. Ask yourself 3 quick questions. 1, am I borrowing only what I absolutely need? 2, do I know the total, final amount I have to pay back, including all the hidden fees? And 3, and this is the most important, am I using this loan just to pay back another one? If you're looking for more local info, by the way, places like advice.elk are a great resource for this kind of stuff. And that brings us to our final thought for the day. These apps, they offer this incredible, powerful, modern promise of instant everything. But maybe, just maybe, in a world that moves this fast, the smartest and safest financial decision we can possibly make is to just slow down and think.